Good morning, it's Malcolm Graham-Wood and I'm here at Core Finance for my CEO interview. And today my guest is Andrew Austin, who is actually Executive Chairman of RockRose Energy. Welcome back, Andrew.
Good to see you again, Malcolm.
Yeah, and you. Great to see you. Well, I mean, what a time of turmoil in the markets, in particular in the oil markets, and we've had a hefty price fall in the last day or two. I don't think we need to go into that too much. We might do it towards the end of the interview if we talk about potential opportunities and so on. What I would like to do is actually, since we met in September, there's been a lot going on at RockRose, and even this morning, when I opened up the computer, you were talking about your first well in your 7-well development program has come in okay. And so why don't you just update us on what's been going on?
Well, yeah, I mean, obviously the last 36 hours have been quite interesting for any company in our industry. But the advantage with RockRose is that we've actually positioned ourselves for exactly this position.
Yeah.
So we were always aware that we needed to have a business that was sustainable in a sub $50 a barrel environment, and we're in that environment. So we're just carrying on as business as usual. On West Bray, operated wells by ourselves, we've basically drilled the first well. That's come on. It's on production, and it's come on at where we expected it to be. We've moved to the second well site. We've spudded that well at 6:15, I think, yesterday evening, and so that's we're drilling ahead on that now. So yeah, it's business as usual, and as you say, it's part of a 7-well program through this year. Most of the other wells are 4 of the other wells are actually gas wells or gas and condensate wells on the Arran development, and which is Shell operated. We're waiting for the rig to come off Gannet to come across to Arran to drill that, but that's expected in the next couple of months. And yeah.
And you've got Blake wells, you've got Dutch sector stuff.
We've got potentially infill wells on Blake, and we've also got Dutch sector stuff as well. And also, this is about the gas-oil mix as well.
Yeah, that is important.
Gas has not. Gas had been hit previously, but it's not gone down as much as oil has over the last 24, 48 hours. And at the moment, about 40% of our production is gas, not oil. So
it's quite interesting, what I'm hearing, nothing to do with what we're talking about just now, is that, fair enough, if the oil price stays down, the first neck of the woods that gets hit is the Permian and those parts of the US. And of course, that's got a lot of associated gas, which would immediately come off the market as well. But that's neither here nor there. So you paid a dividend, you've got a lot of cash, you always tell me. And in fact, in this announcement this morning, you remind us that
on a share price basis, as a significant shareholder in RockRose, I'm feeling significantly poorer. But we do have a lot of cash on the balance sheet. We've made the point today again as to where our cash stands. Those cash balances reflect the cost of drilling that we've had over the last couple of months, and I think it's worth bearing in mind that on an operating basis, we're still making money. We're still generating cash. It's just about how we deploy that and how we look at capex going forward.
Yeah. So I'll come back to potential acquisitions or farm-ins, or whatever you like to call them, in a minute. In the last couple of months, we've also seen the cotton development. You approached that, and you talked to me about it being an option. What talk me through the cotton deal?
Yeah, I mean, it is an option. I mean, the thing about cotton and the thing around the whole Tors, Kilmer and Garrow area, which cotton's in the middle of, so we're already partners in licenses either side of that, is that how you look at plumbing that back to shore. And we wanted to be in the room having that conversation about where Tors gets plumbed back to extend. This is a slightly unusual situation, but we've got it in a couple of other places as well, where we know we have the hydrocarbons. We know we can produce the hydrocarbons, but it's just about the export mechanism. And so cotton is actually about, which way do you tie it back? And that relates to where you stand on Cygnus, where you stand on Pegasus, where you stand on Brea, various other things. And Ravensburn North, which has been commented on by Premier recently. So, which of those routes do you take back? But what we do know is that we've secured an option over a significant amount of additional hydrocarbons. It's just about working out what the way we plumb it back is. And I think overall, the southern North Sea is actually quite an interesting place to be at the moment.
Yeah.
And it also fits into the ESG agenda.
Yeah.
Increasing the balance on gas, and that's, as a board, that's a way that RockRose are looking at things at the moment as to, shall we increase our position on gas? Shall we deepen those positions to make sure that we can be part of the transition energy story rather than the legacy energy story?
Yeah, and there's quite a lot of acreage in the southern North Sea which is still have significant potential and is potentially on the market, having had people walk away from a number of things in the
Couldn't
in the
possibly comment, Mark.
No, absolutely not. Okay, well let talk about that. It takes me to sort of production and oil and gas hedging. Does this change anything? I mean, you're known to be quite sensible, sort of putting on long hedges and so on.
Yeah, I mean, we've put our general position on hedging has been one of ensuring we can secure our capex position. Yeah, so a lot of institutional investors, their attitude is they don't want you to hedge because they're doing the asset allocation. They'll buy into an oil company because they want to be in oil. Yeah, and if you've got a lot of debt, which obviously RockRose doesn't have, and we'll come back to that, I'm sure. But you need to make sure you can make your debt repayments. In our case, we just need to make sure that we can secure our capex commitments, and so we've hedged to the extent that we can secure our capex. So at the moment, we've got more hedges on in gas actually than we have in oil, because we've got more development
wells,
because of Aaron, etc.
Yeah.
And we've locked that in at north of 35 pence a therm for the next couple of years, against a current price of 21, 22 pence a therm.
Which makes it extremely good to be able to write in the presentation. So you've got a very strong balance sheet, you have no debt, you've got cash flow, and therefore that cash, X what you're spending on the development program, is going up. So you're in a strong...
but it's our choice. We don't have to spend the money.
Yeah.
But so long as we're still generating money from our assets, which we are, we're in a very strong place.
But you must want to make that £20 a share of cash pay, or 272 million, whichever way you look at it. And inherently there are potentially things out there that you could be in data rooms, you could be looking at companies and so on. So let's look at the data rooms. You've historically either said to me in the studio or in other places, or just in speeches that you've made and so on, that first of all, you're not lacking in firepower, which I've just described. Secondly, you're not frightened to have a go at something which is potentially substantial. Marathon is a perfectly good example of that. You I think owned up to the fact that you were one of the low bidders on Sicker Point with a more than 1 billion.
I didn't own up to it. Someone leaked that.
But with more than a billion, you put $1 billion on the table. So
it was remarkably accurate.
Yeah, and there are people talking about Spirit and various other things. So without, I know that you're not going to give us any sort of where are we in this thing, and we all know that you're in all the data rooms. So give me an idea of what your thoughts would be at the moment in terms of looking at things.
One of the challenges we face at the moment is the fact that the cheapest thing in the North Sea to buy is us.
Yeah,
and it's a funny world where any deal you do is potentially dilutive to where you existingly stand. So that's an interesting question. Having said that, are we looking at other assets? Yes, we are. You know, we are. The various things you've spoken about, I didn't want to list them back because otherwise it will be on a chat room within 10 minutes. But you know, the various deals you've talked about, yes, of course we're looking at all of those. But we've also got to look at it in context of where we stand ourselves. And you know, we're in a unique position that our equity is backed by cash.
Yeah.
Whereas you know, a lot of other people who are looking at things at the moment, you know, the equity is the fag end of the enterprise value.
Yeah, yeah.
And you know, it's therefore much more questionable.
Yeah.
Which is why I find share price movements over the last...
and this is really interesting because funny enough, one of the things that we both came to without actually thinking about it, because I wrote here, and one of the early questions when we were talking about, you know, the what you've got in the portfolio, I'd written, how does $35 a barrel look for you guys? And then when I was coming up to do, I suddenly wrote, you know, after all, it was only 2016 that we saw $29 oil, and then you said to me, we launched at $29 oil.
The day we floated the company, the original premise was actually $27. It touched that day. I think it was January 16th, 2016.
Yeah.
And you know, that's the price. You know,
when you were loaded up with confidence, the share price was £1 or
50p.
50p.
And you know, basically, the rationale was that there are people in assets at those prices that don't want to be in them, and that creates opportunities. And that's the opportunity we seized, and you know, we did subsequent transactions which have been significantly accretive to ensure that we've created the value we have for the shareholders right now.
Yeah.
And you know, that's worked. And you know, okay, we're finding ourselves back in that kind of same territory. From a RockRose perspective, we're in a different place in that we've now got a lot more firepower than we had then to make sure we can
increase the value of the business for yourself and your
things
shareholders.
that
Now, historically, you've done pretty much everything by going into the data and buying the assets. One of the things that might have happened with the change in the market price of oil in the last few days is that some share prices have gone down so far that makes them almost attractive to you to buy a company. Is there anything that says, you know, you wouldn't ever do it? Are you saying that you've got a group of people, you've got a great team there who are looking at it and saying, this has got to the stage where, you know, we might draw a line in the sand here. We might say, let's make a bid for something because we think it'll be an attractive equity deal.
We have the option of doing that. You know, there are a number of things that have come down a lot. At the moment, I think probably some of those companies, you need the dust to settle a little bit to see what the equity value really is. Taking on a company with a significant amount of debt, I think, would be a question mark for us.
But you could gear up on, you know, I mean, the amount that you could gear up using your cash.
Yeah, we can borrow.
Yeah.
You know, we've got firepower of 500-600 million just against our existing equity. So yeah, that's easy to do. Plus whatever we buy. So yeah, I mean,
obviously the difference on that is timing, because if you think that the spat between Putin and MBS is something that's going to go on for a while, it's not a problem. Things will get into more trouble, and equity share prices will come down, giving you a better chance. If this is just a shakeout and things will get better, I can't believe that you wouldn't look at something and say, you know, this is too good not offer to miss.
I mean, you know, be aware. You know, we had a board meeting yesterday morning to discuss what the options and the opportunities are coming out of the situation that we found ourselves in, with oil having traded down as low as $33. We're reviewing everything. But we do need time to see how these things shake out a little bit. But I think we also should look at the gas part of this mix as well. So people's increasing willingness to hold on to decommissioning, the situation around gas and the whole ESG point, you know, the Greta point is really important. And I think, you know, RockRose can look at where it stands, and particularly around gas. And it's good news that most of the stuff we're investing in over the next year, 18 months, is around gas. And positioning that as a transition fuel, and that is really important.
Does being in Arran per se make you suddenly be potentially an even bigger gas company or a bigger part of the gas company?
Well, it obviously switches the mix. I mean, you know, the proportion of our production that is gas is increasing. You know, we've obviously got the Dutch assets as well, got other assets in the southern North Sea, and I think that is influencing our acquisition appetite. That we're looking more at gas than we are at oil.
Yeah. But interestingly, you've always said that these are the basins that you're looking at the moment, and you're not looking anywhere else. Has that changed at all, or have you suddenly, has someone sort of drawn you abroad, or are you sticking to where so far you've been so successful in terms of?
No, we're focused on the UK, the Netherlands. There is always an ongoing question mark about where we stand in terms of Norway, but we are a business that's that's focused on discovered hydrocarbons, and Norway makes sense mainly if you are, you know, an explorer, and we're not an explorer.
No.
You know, we're a utility. I mean, basically, we're a utility. We own assets. We produce cash off them. We sweat those assets as much as we can. We put the infill opportunities in to the extent that we can. That's what we do.
And
we're not valued as a utility, but that's basically what we do.
And nor are you really valued as an E&P company. And I spent some time yesterday with DGO, you know, who are doing this very same thing in the US, and their model is something which I think is changing the market process, and I think your model is going to change the market process as well. And I think that that, you know, in a way, shakeouts like this actually fall into your lap, not just because, you know, one particular takeover or a company, whatever comes to you or whatever, or the fact that you get the ability to, when you didn't think you would be able to get some more gas rather than load up with just oil in the portfolio, but the fact that assets are available. That funding in the rest of the sector is difficult.
The changing of the guard is still happening. So there are still a number of people who are seeking to leave the North Sea, and that creates opportunities. The equity markets are obviously closed as it stands. Ironically, the debt markets for people who are producing cash like ourselves are open. So there are options to do things. And the reason I postponed our call now by an hour was actually because I was meeting with a debt provider, and you know, and those markets are open. So you know, if you're producing, you know, our results are coming out in a couple of weeks' time, but if you're producing, you know, significant amounts of free cash flow off your assets, as we are, that's attractive to the lending industry, even in this environment, because this is a company like RockRose looks like a utility, but seems to be being categorized as an E&P or an E company, let alone an E&P company.
So let's have a quick look at RockRose in terms of the dividend and the payout and everything else, because historically, when you first started, you were encouraged to pay out, so you bought shares back, and you paid a special dividend, and then last year you paid for the first time what looks like being a regular dividend to shareholders, and I'm sure we'll find out on March the 29th, or whatever it is, where you are on that front. But more importantly, I'd be interested to know where, if you were to take that to one stage further and say, you know, in a few months we still haven't managed to be successful in any of these data rooms, or we haven't bought anything, you don't have much scope for paying out
significant
amount more, or
Yeah,
could
we do.
you could pay another special dividend, or
Well, look,
increase the dividend, or
we are committing to a progressive dividend policy. That's the position we're in. Yeah. So we kind of started this in the small cap space. A number of other people have subsequently followed, like DGO that you talked about, and others are sort of, and Serica is now talking about paying a dividend, etc. But we said, look, it's the shareholders' money. We'll give it back to them if we can't deploy it better elsewhere. And if we can deploy it, we'll deploy it. But now we're in a place. A progressive dividend policy is where we're at, and that's what we're going to do. We've already paid 60p. We've committed, or we said we're indicating to another 25p. The results will be out the week of the 23rd, and that will confirm where we stand. But there's nothing that's going on in the markets at the moment that suggests that we won't continue with where we stand. And that's not just about this year. That's going forward.
I mean, and in terms of sort of payouts and so on, shareholders will be very happy to know that that's going to be continued. Interestingly, do you think that I mean, in two ways? One is, does that make RockRose vulnerable to a takeover? You've got a lump of cash which people could buy anywhere, but you've got a fantastic company, a suite of assets that everyone likes. So do you feel vulnerable to a takeover? And the other point I made is that we've talked a number of times about the fact that you can't actually personally go out and buy any more shares as such, because you're almost at the limit of then having to bid for the company yourself, which makes me think that you could say, right, sorry, I'm not so worried about this anymore. I'll take this company private.
Thanks for that, Malky. Look, there are a number of issues in that. Firstly, we're committed to paying dividends and continuing to pay dividends as it stands. Do we feel vulnerable? The suite of assets that Premier has committed or undertaken to buy is very, very similar in size to RockRose, yet they paid committed to pay $815 million for them without the cash that RockRose has on its balance sheet. But so that sort of puts a value mark against where we stand. Would we take it private? I mean, so long as we can get recognition in the public markets. The problem is that normally the reason you're in, as I said earlier on, the reason you're in the public markets is because you want access to capital. And there's no way that we're going to do a deal which dilutes the position we're in right now at these prices. It's just not going to happen. So, the public markets have been good to us. We've had experience in that previously as a team. We'll see where it goes. But there is a recognition point, and there are issues around should we be premium listed? Should we do a share split? All those sort of things, and they are active discussions in the board. But they're not concluded as it stands.
No, I'd expect to see that. We've been going on for probably longer than we should have been doing, because I haven't a clue what's going on. The timing's gone out the window. But it's been great to be able to talk. Before we finish...
And apparently it's your birthday today as well,
It is my birthday.
So I think everyone should know that it's Malky's birthday today.
Well, thank you very much for that. That's a few more beers to be buying later on. Let's round up by saying, I can't round up by saying what I usually do and say, where do you think this company will be in 12 to 18 months' time? Because, to be frank, the way the market moves, 12 to 18 weeks would be even more difficult.
Hours.
Hours could be the case. How do you see, if you were to say to your shareholders who, and you've got a really supportive, I can tell from people who read the blog and follow me on Twitter and so on, you've got a really big and probably the biggest in the whole market. Bunch of very supportive shareholders. They absolutely love being shareholders of you. What might they expect over the next few?
Look, we're in a very strong position, yeah, and I'm not trying to sort of down talk our peers, but we've got cash, we've got production, we're producing cash from our assets, even at these, unprecedented levels of oil price, and that gives us all opportunities. Someone said to me the other day, an institutional investor said, what's your objective? Do you want to be 60, 100,000 barrels a day, etc.? I said, no, I want to have a £50 share price.
Yeah.
And it's not about, there's a lot of marginal barrels you could go out and buy that from a headline perspective might look really clever,
Yeah.
but actually aren't on the whole way through. So, the company is focused on enhancing shareholder value and making sure that the shareholders get paid. Frankly, right now, we're not being paid for where we stand. Yeah, it's completely ludicrous, but part of that is a product of our success in that there's a lot of people who've made more money in RockRose than they've made in anything else, and therefore they are, they're feeding those shares back into the market. We need to change the register around and make sure that people are buying in point forward, and that's our focus. Our focus is entirely around shareholder value, and myself, the board are very, very significant shareholders. We're not doing this because we're being paid a salary. We're doing this because of our equity investment in the company.
It's always good to see,
and that's important.
Andrew, thank you very much for joining me today.
Thank you very much indeed. Happy birthday.
Well, thanks for it. Today, I'm Malcolm Grahamwood. I've been interviewing Andrew Austin, who's the Executive Chairman of RockRose Energy. Thank you very much for joining us. Look forward to seeing you again soon. Bye now.